Good morning, good afternoon, good evening, traders. I hope you're exceedingly well. In this video, I'm going to go through my Bitcoin levels, the important key levels that I have to hold, the important key levels that we have to break through in order for us to see higher prices above $25,000. So, as you can see on my chart, I've got my key levels marked. And these are basically the three ranges that Bitcoin has been trading in over the last couple of weeks during the month of February. You can see we've had a range here above that $22,700 level and the $24,000 level. And that's the range that we're in right now. So at the moment, we're right in the middle of the range. So I'm going to talk about whether this is a good place to take longs. I possibly would look at doing some scalp trades, very quick in and out, and based on the reaction of the order flow. But if you're not experienced with that, there are some other levels that you could look at to do a swing trade at. So we've got this range above between $25,000 and $24,000. You can see if we pull a fixed range right here, where those value area highs and the value area lows are. Value area low coming in right at that $24,000 area. And you can see we were trading up to the top of the range, value area low, top of the range, value area low. Broke that value area low. And yesterday, actually the 24th of February, last week, Friday, we retested that as resistance and we were back into that previous range. So how can you see if a range is going to break? Well, the very, very easiest thing to do is to look at the volume. You can see right here that as we were coming down to the bottom of that value area low, we had a very, very big increase in negative volume right there. And as we tested the top of this current range and the bottom of our previous range, we once again had a very big negative volume candle, and we broke down to the bottom of this range. So yesterday, once again, I took a long, and I was expecting this long to break out because it was the value area low at that point, a very, very local value area low. And thank goodness I took profits. So as you can see there, I took a long round about that 23,600. My second DGen account, I took it even lower than that. And I could see the price wasn't actually breaking through this point of control. And normally what happens is during the day, if you have a value area low, you can see that we rotate up and down. We went up, came down, and over here we just failed to rotate to that value area high. And that is a very bearish sign. So I took profits here, put my stops at profits the rest of the trade, and you can see we had a very nice move to the downside. I would never short at the bottom of a range. It's just not my style of trading. If that's your style, that's good for you, but be careful of doing that. You will make a lot more money trading the ranges. And as the saying goes, trade the ranges until they break. So very key level here at this $24,000 area, very key level at the $22,700 area. So I would look to swing failure pattern these lows over here. A swing failure pattern is if you get a very long wick. For instance, here you can see a swing failure pattern on the 30-minute. You can see that this candle went out and took out this low, took out that low, and a very quick wick up. Even if you switch to the 15-minute and the 5-minute, you'll see that. And that is an indication that a lot of people are shorting in this area right at support, which is a crazy thing to do. And the bigger players have just gone and gathered up that liquidity. The guys have sold, and the big guys just bought all of that liquidity up, and we had a nice move up. So I'll look for a swing failure pattern at these lows. And why I think we could be going to take out the lows before we take out the highs is if we look at the order flow software here. I trade a lot with CVD divergence. You can see cumulative volume delta is making a higher high, but price is making a lower high. And that often is an indication that people are trying to buy, they're trying to buy the breakout here, and the bigger players are actually holding the price down. So there's absorption happening at these areas. So I'm going to wait for more data to come in. But if I switch off these key areas, I'll switch on our high level timeframes, and you can see that we've got a daily level right at this $23,100 area. I've set my alert there. I'd like to see a swing failure pattern here. And for me, this is only a scalp trade. If you're not a scalp trader and you prefer swing trading, be careful here, because if you don't know how to see a reaction, and especially if you don't have order flow software, you could get caught here and we could go lower down. Areas where we could go lower down is these NPOCs. Now, NPOCs are naked point of controls. And what those are is it's based on a volume profile. If you don't know what a volume profile is, it records the data of the highest amount of volume on a vertical plane instead of a horizontal plane. This on the left is a time point of control, and this is our volume point of controls, these blue lines. So my NPOCs, and based on my order flow software, I've gone and marked these. So you can pause the video and mark these on your chart. Very important. The blue ones are a daily naked point of control. In other words, these have not been touched. The big one that I'd look out for is this $22,700 level, because we could come and swing failure pattern these lows, take out the liquidity there, because there's going to be stops that are sitting there, long stops. And what happens is, because there's a lot of volume that have transacted there, there's a reversal area that will happen here. So I'll look for the swing failure pattern, look for the reaction there. If this breaks, we'll go down to that $22,100 area. So one scenario to be aware of, that I think if we swing failure pattern this low, 22,700, we are going to go next to take out that $24,000 area level. If we get a reaction here at that $24,000 area, possibly taking out this level there, look for a swing failure pattern here, look for a swing failure pattern at these highs. I'll look to short it down. And I really do believe that because we've tested this $25,000 area so often, and I'll switch on these key levels again. We tested it once, twice, 3 times, and we had a short there. If we come and test it again, because people will be expecting to short this level because we've had breakdowns from that level every single time, I believe we will possibly get a breakout if we come and retest this as support again. So, and if that happens, there are some levels at the $26,000 and $27,000 areas, but I really believe we're going to come and take out that $30,000 area. So be very aware of those. And just in summary, I'll show you where my scalping plan is for today. You can pause the video. Obviously, this is not financial advice. If you don't know how to look for reactions, careful trading this. Rather paper trade. But by the way, if you want to know how to start marking these levels on your chart, MPOCs, levels, and so on, check out my link for Bybit in the description. I'll be setting up a Discord channel. Once you've registered with my link for Bybit, I will verify that you've registered via my link, and I will let you into my exclusive Discord. There's no charge for it, but the prerequisite is that you use my Bybit links. So be aware of those areas. Hopefully we can get a good bounce and we can get some higher levels on Bitcoin. But as I said, if we don't get a reaction at this $22,700 area, be careful, because then price is more bearish, and I don't think we'll take out that $24,000 area. So thanks for watching. Leave me a comment. Click the like button. Subscribe if you are new to the channel, and I'll see you next time.